Hello options traders, Steve Ganz here, and I've got a little adjustment that I'm going to make to this NVIDIA trade. So this is a trade that's in the start to finish series. I opened this trade, we can see, back on May 29th, and I opened this as a put spread. This is what's called a bull put spread, where I sold the 1130 put and then I bought the 1100 put, which gives me this configuration. Obviously, this is a bullish trade, and at the time I opened it, it had $1,600 in potential loss, $1,300 in potential profit. So let's just take a look here at NVIDIA when I opened that trade. So I opened it here on the 29th. It did go against me here for a day or two, but now it's broken out, rocketed to new highs. And I want to show you what I'm going to do now that this trade has broken out, is likely to run, and I'm thinking who knows how high it could run, but I'm going to look at doing something here in around the 1300 range that might add to this trade, or juice, what I call juice this trade. So we can see right now, since I opened this on May 29th, so I've been in this trade, whatever that is, 6 days, 7 days, it's up 47%, $622. Now, I could just take this trade off. I could just let this trade continue to run. If I let that continue to run, it's going to continue to decay, and I could ultimately end up with $1,330 in profit at expiration. But let me show you an alternative here. Let me show you something that an options trader can do when a trade like this goes in their favor. And my thinking again here, and could be totally bogus thinking, but my thinking is that a run into the 1300 range, 1310, something like that, that's almost another 100 points. I think NVIDIA would likely be a little bit exhausted from a run at that point. So if that is my opinion, and that's over the next 4 weeks basically, I'm looking at adding a call spread. So I'm going to come in here, I'm going to sell call, and let's just say I'm going to sell that up here at around that 1300 range. Now you can see when I do that, all of a sudden I have unlimited risk to the upside if NVIDIA continues to run up. I like to keep my trades what's called defined risk for the most part. So now I need to buy a further out call to give me protection. So now let's come and buy a call, and that call is going to be a little further out here. And you can see that I'm now creating essentially an iron condor. But I really don't know that, I don't think I want any upside risk in this trade. So if I don't want upside risk, again, my premise here is that I think NVIDIA might start to stall at around the 1300 range, but I don't really know. NVIDIA is one of those things that it is running hard and running fast right now. So I really don't want to run the risk of loss, or certainly not much loss to the upside. So I can come in here and I can tighten this up to maybe it's only a 10-point widespread. In this case, even if NVIDIA rips up to 2,000, I'll still have whatever that is, $600 in profit, somewhere in that general range. Now, I'm willing to take a little more risk to the upside, so maybe I do something like this. And now I would have, if this thing were to go up significantly, I would have a little bit of potential loss. But I want you to see the other dynamics that change in this trade. So this is where, and I'm going to close up this little window that shows my current profitability so that we can see what I'm talking about here a little bit better. So I can go back and forth here to my previous trade, and I want you to look here. Let's go back to the previous. So this is my current position. I have a max potential loss of $1,600, max profit of $1,300. So I want you to remember those, and then we march forward here. Now, my max loss is only going to be $1,100. My max profit is up to $1,800 in this case. Now, my chance of profit dropped a little bit because theoretically NVIDIA could now blow out the upside, where previously it couldn't really blow out the upside. But I'm not overly concerned about that. Again, let's just flip back and forth here. So I went from having a $1,600 potential loss, $1,300 max profit. By adding that call spread, I've juiced the trade. I've increased my max potential profit. I've reduced my potential loss. Now, the other thing we can look at here is let's look at the Greeks. Now, you have to have the paid version of OptionStrat to see these, but let's go back and forth on these two. My current position, I am 6 positive delta. That's definitely a bullish position. I have $10 in theta decay. I'm not too concerned about the rest of these numbers. These are the two main numbers that I like to focus on. I don't mind being positive 6 delta, but I'm also okay going ahead adding in that call spread and essentially neutralizing that positive delta, turning this trade to more of a delta neutral style trade. And I increased my theta by 50% basically, rather than this now, for lack of a better term, putting $10 a day in value into my account. If it stays in this range, it's now putting $15 a day into my account. And of course, that accelerates the closer we get to expiration, to where when I get down to that last day or two, if I carry this trade that far to expiration, it'll be decaying at the rate of probably $100 or $200 a day. So I am going to go ahead, add this call spread in, flattening out my delta. Now, one of the reasons I'm doing this now, when we have a day that NVIDIA is running up hard, breaking out to new highs, what are most traders doing right now? If you missed the NVIDIA trade, if you didn't have a chance to get into that, people tend to get a little bit greedy. They tend to start running out there and either A, buying the stock, or B, they're buying long calls, and they're going to be jumping up here and they're going to be buying this NVIDIA long call because they've missed the boat here. They want to get in. Because that greed takes over, many times these are going to be elevated in price. So right now I can get $3,200 for selling this. Now, again, if I'm going to create this as a spread, I am coming back here and I'm having to buy this one at $2,700. That, of course, is giving me that $500, if you will, that I'm picking up in adding this trade, because I'm selling this one for the $3,200 and I'm buying this one for the $2,700. That gives me that $500 in credit for adding this trade into the mix. That, of course, is why this was beefed up here or boosted here up to about $1,800. That's why my maximum risk went from $1,600 to $1,100. It's because I introduced this side of that trade. So let me just go ahead now. I'm going to save this trade, but I'm going to save it as an adjusted trade. So I don't want to overwrite my existing trade. I'm going to save as a new trade, but I'm going to call it, let's see, NVIDIA. I don't know why I called this an iron condor to begin with, because I didn't do it as an iron condor. Let's see, I'll just call spread, and then I'll just make a note here that today is the 5th to turn it into iron condor. And we're going to just save that as a new trade here so that I can go back and compare and contrast how these two different versions of the trade do over time. So I will put that link in the notes down below. If anyone has some specific questions or comments, please like, subscribe. Let me know if you got any thoughts on this one way or the other. Maybe I shouldn't have capped NVIDIA. Maybe you wouldn't have capped NVIDIA. Again, pros and cons to that. We'll see how it plays out. That's it for now, everyone. Take care.